Welcome to TradeTheNBA.com. This is John's Reporters for Monday, September 17th. Well, we got that push through on Friday, and it really got us back up to the 100% Fibonacci lines up there at the top. We can see now that we're starting to see the low rise, which could put some downside pressure on it for the first time, but everything right in line. We had the steel continuing to rise. Move over cyan really gave it the oomph because that short-term buyers continued to push, and they had mid-term buyers following along. That pushed the orange down underneath, and shorts have been covering, well, just haven't even been in it since it dipped below zero here on the cyan back before. And that all happened right here at the stabilization of 76%. No contrarian news to push things anywhere else. So, and we're still within that gold trend that we started back over here at the decline, and then once we got that steel crossing above the red, that sort of flattened things out, gave it a stabilization. The NQ still way behind. It's going to have to do a little bit more to catch up, but much stronger bullish reading. No question about that one. The euro gave back a little bit, but still it's again right at this top side of the range. Of the band where we expect it to be. So as long as it stays outside of there, that's even more bullish for the S&P, and the recognition that interest rates are going to be rising. Clearly indicated here from our TLT readings, so those still elevated. And you still hear the clamorings of some who say that the Fed's going to have to adjust and not raise rates, blah, blah, blah. But I think that's currently in the foregone reading, especially when we look at this oil and that, knowing that you've got a degree of consistent built-in inflation, which is something the Fed had been targeting for a while, which was always strange, this belief that inflation is what justifies growth, but maybe in their old model. But that's a whole different topic. I can be started on the Fed and what they do, but they often do more to mess things up than to improve them. Gold still can't catch a break on the news, and this was a decent setup here, given the fact you have the rising shakeout and everything, but you're getting gold below 23%, and we know that that often leads to revisit of the lows. So no question that it started to give about. You couldn't get really the reset of the orange below, and then right as they met at this point, you got a rejection of it immediately on that open Friday. That's with cyan rising and green falling lower. That's not as bullish as you would like. Could still turn around. From an intraday standpoint, it was pretty clean. We had those peaks from the previous day, came across, and we made a new high, which put in the positive extremes and gave a, one of my beautiful snake openings. It's orange rising, steel falling on the DOC here. At the same time, green moves below red. It didn't hurt that you had cyan popping above zero, and that was the signal. Still, and again, I always point this out, there were still a couple bars before it reacted, and then boom, it finally did. And not too uncharacteristic, I point out too, when you get this steel coming from below and it crosses, it's usually the end of the significant portion of the downturn. And if we kind of look at it right there, that's where it was, and you can see the green dots popped in and popped up a little bit before putting in a secondary short snake right here. Not too far from the same place, but it's a good one because it lets you know that at that 76 was a good time to cover, some portion of multiple contracts as a precaution, because oftentimes those will bounce back up and you don't get that second opportunity. In this particular case, we did with the clean signal that took place again right there, which I could just as easily marked it as well, and boom, caved. Likewise consideration right here, you ended up with the steel crossing above both the orange and the cyan. When it doesn't reset, that gives you a secondary portion of it, and you get the full reset of the orange below, everything you look for buy configuration, and that popped back up before doing the exact same short snakes, which brought us back to the lows. We ended up with gold below the 50, and that one definitely gave us the zero return. And then no new reset of the buys during all of this consolidation, which is all it was. And then you did get the new buy right down there at the previous algo retrace. That was a positive extreme retrace value at 29.05, and that produced the end of day Friday afternoon late buyers that I like to refer to run, and we can see that going into the end right there, you had a gold candle that developed right at the close. So all in all, the market behaved much cleaner than the contract rollover day did, and so we would expect that people are going to be migrating over to the new contract more as the beginning of the week and we start to move through towards expiration. So that could add to a little bit of volatility, so we'll see, hopefully. We always like that. The range was pretty good from before when we were at 30, but it split up to about half that, so modified a bit. But that's going to happen. And yeah, we look to see if there could be a breakout, because that would be the most significant configuration if we do. And whether that's sustainable, usually a breakout pops and then falls right back into it. We're going to have to see if they've got enough left with half the month already gone. It's possible, but be kind of unusual. So that's the long and the short of it. As always, I'll put up anything unique that shows up. Trade well. We'll talk to you later.